If you are a winery owner, or really any commercial ag owner in California or Texas, this is the video for you. We're going to be talking about our loan products available for ag business, how they work, what to expect, what are some of the loan limits. I'm Clark Alexander. This is Pure Perspectives. I'm here with Gary Pierce. Gary's down in Texas. How you doing, Gary?
Outstanding, outstanding.
We are,
Ready to be talking
yeah.
about
Let's
some
talk
farm and
ag.
ranch
Let's
stuff.
talk. Let's talk
Yeah.
farm and ranch. Not not new news, but well, the winery industry is struggling. I have a good friend
hmm
here that's actually been over here on a job from Australia, and he's talking about how not just wine but spirits are also taking a massive hit this year. It's been going on for some time.
hmm
The winery owners that we meet with are really feeling it. They're having trouble
hmm
accessing capital to continue their growth. They're having to reevaluate their
Yeah.
crop, what they have in the ground, should they keep it. And
hmm
everybody's like, well, wine, can't you just store it? It gets more valuable over time. Yeah, well, storage space costs money. So they're they're
Yeah.
they're feeling the crunch up there, and it's not just Napa; it's Central Valley here, and Texas is also becoming a big producer in the
hmm
wine space. So yeah, wineries are going to be
Sure.
the focus here, but really, it's any commercial ag product that's out there that you
Yeah.
need assistance with. This video, we're going to talk about what the specifics are and how we can help you
hmm
secure financing to help you grow and maintain your operation. So, I guess at a
Absolutely.
high level, Gary, let's talk a little bit about what the product is, how it differentiates from what
Okay.
people might think about from a traditional mortgage, so to speak, how this differentiates
Yep.
to that product.
Yeah. I guess the biggest difference that the way we evaluate the lendability of the property or the client themselves, and so we add a little bit of a twist to that kind of evaluation. So typically when you're buying a house, primary home, we're looking at debt to income. Basically, what's your ability to
Hmm.
repay, right? In this case, we're looking at a whole lot of different factors. And one of the cool things that we're able to do is use assets to help with the qualification of the loan, right? So we obviously want to see income. Where we're not showing, huge losses.
Hmm.
Obviously, that's not
Yep.
sustainable. But we do have instances where we can get around that. But the assets. So let's just take, for example, $2 million loan. If a client is able to show like a 1-to-1 ratio is what we like to
Hmm.
start with, $2 million in assets, whether it's cash, whether it's property, equipment, livestock, crop in the ground, like real live assets, right? And so that's the kind of thing that we're looking at and evaluating on the front end prior to getting into underwriting. So when we're bringing that loan to the investors, Farmer Mac, they're looking at it and saying, okay, yeah, we've got some good income, we've got really good assets, and so it just makes it a stronger file that way.
So, is the 1-to-1 ratio something people should keep in mind when they're in this business, when they're trying to access capital?
Yeah, I mean it just like any other business, right? Like profitability and
Yep.
assets, right? So that it doesn't matter what business you're in, it can be more challenging in the agricultural
Hmm.
world to kind of keep that ratio, but it's super important to as far as a lending, process is concerned. It's kind of like on the self-employed stuff when we do for primary homes. A lot of people like to write off a lot on their taxes, and so we have to use some alternative, ways to get folks financed. But in this case, obviously the stronger the file, the better likelihood of getting financed and more favorable rates.
Got it. And then so on the potential loan size, what is kind of the
hmm
low and high end range that we can service?
Yeah. So on the loan size, the low end is a 500,000 minimum loan size. Now it's not purchase price. So if you're purchasing property, your actually purchase has to be somewhere in the neighborhood of, call it 750. Excuse me. Um, but you can go all the way up to 100 million on this type of a product. So, most of the folks we're seeing are in that million to, kind of 3 to 4 million range, whether they're doing a purchase and they're putting, a lot of them are bringing a lot of money to
Yep.
the table. So if they're buying a, $3 million place. Typically, they're putting a couple million down. We might be financing $1 million. That's kind of what we see a lot of. But again, you can go up to it's the same process up to 50 million, as long as we can document the income and the assets and all that sort of thing.
And then from a turnaround time, from the moment we connect with a potential borrower, they need access to capitalize their business, access to cash to capitalize their business. What turnaround times? It's different than the residential world. What should customers look to expect there?
It really depends on the complexity of the
Okay.
deal. If it's a super complex deal, let's say you're, a big winery or a big dairy, and there's, the financials are complex. That adds days to the process, right? And so, evaluating all that can take some time. The appraisal is going to be a little bit, that could be, that could take up to 3 or 4 weeks, depending on the size of the property. If you're just, looking at buying, a piece of raw dirt that's properly irrigated, whatever, that's probably not going to be as complex as somebody buying an existing winery, for instance, right? So there's it's hard to give an exact number. The less complex stuff, I would say we're going to be, 30 to 60 days, pushing 60 days on those is what we've seen. About 45 days is probably a fair number. But if you get into a more complex operation, millions of dollars of revenue, multiple revenue streams, multiple properties, lots of assets in terms of equipment. Those things drive the process a little bit longer, because there's a lot more analysis that needs to be done.
Yeah, and I think the one thing I've learned in some of the operations that we see, the larger operations we see in Napa, is there are third-party investors involved, right? So,
Correct.
you are gathering more information, you are involving more people. Some of these winery owners are somewhat hesitant to do that until they have a more concrete feel on what we're going to be able to provide. So we're happy to, spend as much time as possible to get you comfortable with what we're able to provide before we're bringing in your outside investors, or really just involving your CFO or accountant to figure out what documentation we need to get things rolling. So, I think when you're talking about the appraisal, you're talking about a much different than what's 123 Main Street compared to all the houses in the neighborhood that are the same size. This is different.
Sure.
You've got equipment, in most cases extremely expensive equipment, that is an asset that needs to go through the appraisal process. So it's not as clean as just saying, hey, what's 123 Main Street worth, and how can we put a loan against it? We've talked a lot about kind of winery, but really there's no limitation as far as type of crop, or I'm sure in Texas you see a lot of ranches, cattle farms, things of that nature. There's no limitations there, are there?
Now, the biggest any legally raised crop, we can't do cannabis at all. But if you're from our area, we see, the stocker operations, we see dairies, we see, cow calf operations. It just across the board. Our area is really big, Weatherford for horse communities, performance horse, equestrian facilities. Those are pretty common. Poultry, pork, any of your traditional kind of farming operations, we can take a look at and consider.
So, our goal and one of the areas of interest as we thought about California, and specifically Northern California, is how to fill that void in wine country. So I'm going to be spending more time up there, meeting with winery owners, getting them more involved in the chamber and what have you, as we try and fill that void. That's definitely that definitely exists up there. So Gary,
Yeah.
thanks so much for taking the time. We'll
Yeah,
we'll get this
absolutely.
out
Good
to our
luck.
network of growers, and we look forward to delving deeper into this product as we learn more and really get through more complex loan situations
Yep.
as the years go on. So thanks everybody for tuning
Yep.
in. Hopefully this was informative. We'll have more to come. Thanks Gary for taking the time.
Awesome. Good
See you
luck.
everybody.